Good morning, everybody. It's 10 o'clock. I think it's time to start another DWD not-for-profit webinar. Today, we're going to cover cost allocations. So before we get started, I want to take a moment to introduce our not-for-profit team here at DWD. My name is Tyson Moore. I'm an accounting supervisor in the not-for-profit division. Joining us today is Director Phil McKenzie and our presenter and partner, Carrie Minnick. Now, before we get started, I have a couple of housekeeping items to cover. If you've been to these webinars, you've probably heard these before. I'll just reiterate them really quickly here. Our webinar is live, it's interactive. So for those that have questions, use the question and answer feature. You should find that at the toolbar at the bottom of your screen. We will be answering questions periodically throughout the presentation. Also, Carrie's slides will be emailed to everyone attending the webinar today, along with being posted to our website after the presentation is finished. With that being said, I will turn the floor over to Carrie to get us started today.
Thank you, Tyson. Again, just want to welcome everyone to our webinar today. We're going to talk about cost allocation. So we're going to talk about expenses today, both natural and functional allocation. So when we talk about expenses, specifically cost allocations, there is an accounting standard. So these are the rules that we have to follow when we do record our financial information, called Presentation of Financial Statements of Nonprofit Entities. And this was passed or went into effect for years ending 2018, calendar years 2018. So this has been around for a while. But this standard requires all nonprofits to report expenses by nature and function. So prior to this standard, only health and welfare organizations were required to do this presentation. But with the implementation of this standard, all nonprofit organizations are now required to report expenses both by nature and function in one location of their financial statements. So if at the end of the year you have an outside accountant come and prepare your financial statements, whether it be a compilation, a review, or an audit, they need to include your expenses, again, by nature and function, either on the face of a statement, so like a statement of activities, an income statement, in a separate statement, the statement of functional expenses, which is usually how DWD does it, or in a footnote disclosure. In addition, we also have to disclose qualitative disclosures about the methods used to allocate the costs among program and support functions. So because of this requirement, we're going to talk today about how your organization can follow it and make sure that you're doing things properly. All right, so if you look at the screen now, we have a very small chart that has a few expenses on the left: salaries, benefits and taxes, supplies and travel, services, rent, and depreciation. And these are called natural classification. So when we're making payments, when we're paying somebody for a service or making purchases, when we record the transaction into our expenses, we're normally recording them by natural classification. So what was the expense for? Was it for salaries? Was it for supplies, rent, and so on? And obviously these are only a small snippet of various accounts that you could have. But then when we go look across the top, we're also in this chart disclosing the expenses by function. And so when we talk about function, we're meaning what was the function? Was it a program? So for example, we have community services and disaster services. So those are two different programs. We have management in general, and then we have fundraising. And management in general and fundraising are considered supporting functions. And then we have our programming functions. So again, when we talk about natural classification versus functional classification, this is what we're talking about. Again, natural classification is what was incurred, what was the expense. And then functional classification is why an expense was incurred, what was it used for. So again, just some examples of natural classification. What was it for? Salaries, payroll taxes, supplies, and so on. And you can, have as many of these as you want. There is no requirement under the standard or by the IRS or anyone else that requires you to have a certain number of classifications for your natural classification. But obviously you want to make it reasonable so that the reader of the financial statements understands what you spent what you spent money on. So for example, you're probably not going to include your rent expense and your salaries expense into one category. That just doesn't make sense. Those are two totally different types of expenses. Where you may include rent and utilities in one expense called occupancy. It just really depends on what the organization wants to present to the people, to the readers of the financial statement. So again, there's no requirement as to the number of the classes that you have to have. It's really going to depend on the organization. I always recommend starting off with the Form 990, which we're going to look at in a little bit. What classifications is the IRS asking for? Because obviously those are the classifications that you are going to have to report to the IRS. So that's always a good place to start. So again, we have the natural classification and then we have the function. So there are 4 functions: program. We'll go into more in depth what each of these mean, but we have program, management in general, fundraising, and membership development. Again, management in general, fundraising, and membership development are supporting activities. These are more of the administrative type expenses. Not every organization is going to have a membership development function, but those organizations like YMCAs that have members, you will more likely have this type of expense. So let's dig into what each one of these categories mean. So first we'll talk with program expenses. So these are really the expenses for what your organization was created to do. They fulfill the purposes for what the mission exists. So maybe you're a child care provider. So it's going to be the expenses related to providing child care. Or maybe you're an educational type entity where you provide education. So it's going to be those expenses related to education. Common expenses that are for these types of function are salaries and benefits for those workers, employees that are working directly in the program. You might have supplies, materials, or food that are also directly related to specific programs. So those are very easy expenses that you can understand that can go directly to the program that you're providing. And you can have more than one program too. It doesn't necessarily need to be just one program. Next are management in general. These are activities, again, it's a supporting activity, so it's not directly related to your programming. They are not directly identifiable with one or more program, fundraising, or membership development activities. So these expenses are still necessary and important to run your organization, but management and general expenses are more expenses incurred because you are running an organization or running a business. It doesn't really matter what type of program you have, you're going to have these expenses. So some common management and general expenses, you can see there on the screen. Also, your audit fees, the fees to prepare your Form 990, payroll fees, those type of fees really don't go to a specific program fundraising activity. They are more of an administrative management and general expense that just, you have to have those expenses because you're running a business. The standards actually provide a couple of good examples for management in general, because I know sometimes it can get kind of confusing as to what constitutes management in general versus programming. So we'll go over this example. The Human Resource Department is involved in the benefits administration for all personnel of the nonprofit organization. The Human Resource Department's related costs would not be allocated to any specific program. Rather, those costs would remain a component of management and general activities because benefits administration is a supporting activity for the entire entity. So you have an HR person and they are involved in managing the benefits, the retirement, health insurance of all of the organization's employees. That HR person's time would be considered management in general because what they are doing is providing, again, just a general service for all employees. It is not going to be allocated based on the employees that are participating in the benefits, but rather the HR person's time. So it's considered management in general. Here's another example that the standard gives. A nonprofit organization receives federal grants and employs an accountant who is responsible for grant accounting and reporting. Under the terms of the grant agreement, a fiscal report is required to be filed that details expenses incurred and charged against this grant. The fiscal report is not part of the direct conduct or direct supervision of the grant, but rather is an accounting function. Therefore, the grant accountant's compensation and benefits would not be allocated to the program. So again, you have an accountant and they are doing the reporting for a federal grant in this instance, but it could really be any type of grant. And as under that reporting, they're required to file a fiscal report. Then the action of the accountant filing that fiscal report is not related to that program at all. It is just a general management and general administrative expense that needs to be done. So again, this expense would be considered management in general. The next function is fundraising. So these are the costs that are involved with soliciting contributions, enticing people to give to your organization. So for example, your development person, their salary and benefits, if you hire a grant writer, if you do an annual mailing requesting funds, the printing and postage, the mailing costs for those requesting the donations, that would all be considered fundraising. Or if you have a special event expense, your special event expenses. So for example, you have an annual dinner, you pay for a facility, you pay for someone to come and speak, the food, the printing, all of that related to that event is considered fundraising because it is an event that is you're requesting people to give to your organization. You're trying to get them to support your organization through financial support. So that would all be considered fundraising. And then finally, we have membership development. So again, not all nonprofit organizations are going to have membership development. Again, it's going to be more of the YMCAs and those types of organizations that have memberships, that have members. And these would be considered the costs involved with soliciting members. Again, if you have a salary and benefits of a membership director, or if there are expenses for recruiting members, those were the type of expenses that would fall under membership development. So we've talked about the different functions. So now we have, of the expenses, there are direct costs and indirect costs. So direct costs can be traced directly to a specific program or activity. And those were kind of the expenses that I talked about briefly under each of the functions. So for example, your development director salary, they only work on one thing normally, fundraising. So all of their salary, their benefit, it's going to go directly to the fundraising function. Classroom supplies. Let's say you have a daycare or a nonprofit daycare or preschool that you're running. The supplies that you purchase directly for the classroom, they're only for that classroom, so that is very easy. It's directly related to programs, so it's under a program function. So with direct costs, there's really no actual allocation that we need to do. These are the easiest. We have an expense, we know exactly what it's for. It's directly related to a specific function, whether it be a program, management in general, or fundraising. We can easily put it into that column. We also have indirect costs, and this is where it gets a little bit more confusing and takes a little bit more work. So indirect costs cannot be attributed directly to a particular program. So they are shared across multiple functions. So for example, your telephone costs. More than likely, you're going to use the telephone for multiple different functions. Sometimes you'll use it related directly to program. Some of it will probably be for raising funds or thanking donors. Other times it will be management in general. Or insurance, you have property insurance. So you have a lot of different things that are covered. Your building is used for program management in general and fundraising. So these are the type of expenses, these indirect costs that need to be allocated to appropriate functions. So how do we do that? Well, we have to put into place an allocation method. So when we do this, we really need to look to see what activities are causing this cost to be incurred. So there are some requirements in determining what the allocation method is. It must be rational, it must be reasonable, consistently applied, and documented. And GAAP, Generally Accepted Accounting Principle, requires that your financial statements disclose these allocation methods. The allocation of expenses and disclosing how they're allocated is not only a requirement of GAAP. So if your financial statements are on the cash basis or the modified cash basis, you will also have to follow these rules. And again, this additional disclosure of how you're allocating these expenses just shows additional transparency about the financial practices of the organization. So this is why it's so important to have an allocation method in place, so that not only you can properly allocate expenses, but you can disclose what that policy is. So let's take a little bit more look into what rational, reasonable, consistently applied, and documented means. So when we're talking about reasonableness, and it's both reasonable and a necessity. So, for carrying out an organization's exempt purpose, what expenses are really reasonable and necessary? There are probably some expenses that you could incur, could pay for maybe, that have absolutely nothing to do with your organization. So those really the organization shouldn't be being paid for. The expenses that an organization, that a nonprofit pays for, really need to be directly related to the organization's mission and activities. So for example, paying for your executive director's personal vacation. Obviously that is not reasonable, that is not necessary, that's really not something you should be doing at all. But so we don't want to have those kind of expenses. We're talking about expenses that need to be incurred to carry out the organization's programs and operations. So it's kind of pretty much common sense. Consistency. So we need to make sure that once we determine how we're going to allocate these expenses, we need to be consistent from year to year on doing so. We don't really want to change every year or every month. There really needs to be a reason why we're changing. So once we come up with an allocation method, we want to really follow that allocation method year over year, unless there is something significant that happens. So for example, if an organization buys a new building, if an organization adds a new program, or maybe you hire 10 new people, those are significant events that occur that are really going to impact your expenses and probably how those indirect expenses are allocated. So when things like that happen, we really need to go back and evaluate our allocation methods. But other than that, we should really be consistent from year to year. If you're inconsistent, it really could throw up some red flags, not only during your audit, but also when you're reporting to donors or regulatory agencies, when they're looking at last year's expenses compared to this year's expenses, and they see, maybe 80% of your salaries are allocated to program this year, but last year only 40%. Okay, something better have happened, like a significant event, and it wasn't just, okay, you have no clue what you're doing and you're just choosing randomly how to allocate these expenses. So when you have variances like that, it could potentially throw up red flags to the reader of the financial statement. So that's why you really want to be consistent on how you're allocating your expenses. And then finally, documentation. We need to document, we should have a written policy in place, the methods that we use to allocate these expenses. So if you don't currently have a written cost allocation policy in place, you really should consider putting one into place. Basically, what this is saying is how the organization is going to determine how expenses are allocated between program, management in general, and fundraising. And we'll talk next about the different bases that can be used, but really the organization needs to figure out what a good, reasonable basis is for your specific organization, and then document that. Okay, for salaries, this is how we're going to do it. For insurance, this is how we're going to do it and why. Your auditor, if you do have an audit done, they will probably ask for this documentation because they'll need to understand how the expenses are going to be allocated. And then also as part of the policy, you should really include how often the allocation methods are going to be reviewed and updated. Again, you don't want to make any significant changes to your allocation methods unless a significant event happens. However, you should review those allocations every year just to make sure that they're okay. Yep, they look good. Nothing really changed during the year. We're good with last year's allocation method. So when we're talking about allocation methods, this is again for those indirect expenses. So for those costs that are going to go to more than one function. Again, not your development director salary, not your program director salary, but maybe your executive director salary, who spends time in all three functions: program, management, and general and fundraising. Your telephone, your insurance, your depreciation. Those expenses that cover multiple functions, we have to determine how we're going to allocate that expense between those different functions. So in order to do that, we have to come up with a basis that we're going to use to allocate each expense. So some common ways to allocate expenses are time and effort. So we're going to, and this is very common for salaries, employee benefits, payroll taxes, health insurance, all of those expenses that go with people. So we're going to look at the amount of time that our employees spend on each program, each management general item, each fundraising item that they're going to do. And then we're going to allocate that expense based on that time. So what you can do if you don't know how much your employees spend in each of the different areas, you could do a time study. I would recommend doing a time study maybe throughout the year. Do one at the beginning of the year, do one in the middle of the year, and then do one at the end of the year, because their time may change depending on what's going on throughout the year. Just have them write down on a timesheet, if they don't already keep timesheets, what they're spending their time on. So then you can say that, okay, John Smith spends 20% of his time on fundraising, 10% of his time on management general, and 70% of his time on program. So that's how his salary expense is going to be allocated. 70% of his expense is going to be allocated to program, 10% to management in general, and 20% to fundraising. Okay, that's kind of an easy one because most often salaries are allocated on time and effort. Now, the other indirect expenses, you're going to have to figure out what the best way for your organization is to allocate these expenses. There's no really right or wrong answer. It just has to be reasonable. So another common method is full-time equivalents. So this, we're going to look at the average number of hours worked for employee for each program, each function. So when we look at program management, general, and fundraising, we could allocate different expenses on the number of full-time equivalents in each one of those functions. Square footage is also a very common way to allocate expenses, especially those expenses related to occupancy. So your depreciation, utilities, building insurance, a lot of time these expenses are allocated based on square footage. So if you look at your total building, how much of that square footage is used for programming? How much of the square footage is used for the fundraising department's office? And then how much of it is used for just general administrative expense offices? Other types of allocation methods are key indicators, where you could look at program service counts. So, the number of clients served, number of families placed, etc. There just needs to be some kind of basis in place as to why or how you're allocating those expenses. If you say that you are allocating expenses based on usage really isn't a basis, because what are you basing that usage on? Again, is it time and effort? Is it full-time equivalents? Usage is not really a good, reasonable basis. Revenue is also not a reasonable basis. So if you are allocating your expenses at the end of the year based on the revenue brought in by the various programs, that is not considered a reasonable basis, and here's why. Because the allocation method should be allocated based on the function that uses the resources. So it should be based on the inputs, not outputs. You're also going to have some programs, I bet, that don't generate any revenue. So if they don't generate any revenue and you are allocating expenses based on revenue, that program would have zero expenses. So allocating expenses by revenue is not really a reasonable basis that you should be using. So again, there's not necessarily a right or wrong answer as to what basis you're using. It just has to be reasonable for the expense and has to be consistently applied and documented. Okay, so again, you just need to look within your organization which one of these, and these are only 4 examples. There are other allocation methods as well. You just need to figure out what basis that you can measure within your organization that makes sense on how you're going to allocate your different expenses. And then that's really what you're putting in your written policy. So we're going to say these expenses, salaries, employee benefits, payroll taxes are going to be allocated based on time and effort. Our time and effort has been determined by, the time study that we did, and currently these are the allocations. Or our insurance, our depreciation, our utilities are going to be, these expenses are going to be allocated based on square footage. So that's what we're looking for when we refer to a cost allocation policy. I just want to talk briefly about joint costs. There are some costs that may be incurred that combined fundraising and other program services. So for example, a lot of times an organization might do a mailing or some kind of event where they're asking for money, but they're also providing information about the program. So we need to figure out how much of these expenses are going to be for fundraising versus programming. In order to allocate some of that to programming, there are certain things that must be met. So the default is that these expenses are going to be fundraising, but if you can meet the purpose, audience, and content criteria, you may be able to allocate some of these expenses to programming. And these here on the screen, you can see the purpose criteria that must be met is, does the purpose of the joint activity include accomplishing a program or management general function? So is there a call for the people to actually help accomplish the organization's mission? So for example, if your organization's mission is to educate people about smoking and to stop smoking, is there a call for people to stop smoking? The second criteria that must be met is the audience. The audience that is selected must be based on the need of the specific call to action and the ability to take specific action. So maybe those individuals that do smoke, trying them to get to stop smoking. And then finally, the content. There must be specific content that again calls for a specific action to help accomplish the organization's mission. So again, when you have those types of events that include both fundraising and program, you really need to be careful on how you allocate those. Again, the default would be allocating those to fundraising expenses. However, you may be able to allocate a portion of those to programming if you have these certain criteria that are met. The reason that you would want to allocate some of those is to program is that when funders and watchdog groups, the people that look at your financial statements in your 990, they're going to look to see how much of your expenses are allocated to program versus management and general and fundraising. They want to see a high level of expenses in programming because that's what your purpose is, that's what your mission is. And so they want to see that most of your expenses are going to programming. Now, when you're actually allocating those expenses and coming up with your allocation method, you can't just randomly say, we're going to allocate 85% to program. That's not how it works. We need to make sure that it's reasonable, that that's actually the inputs, the resources that were used for programming. You are going to have management and general expenses because you're running a business. If you get contributions, you are going to have fundraising expenses. So you need to have some expenses in those other two categories as well. It's just that probably most of your expenses should be or will be program. It also depends on the life cycle of the organization, what's going on within the organization as to how much is allocated between the three functions. If you have a very large capital campaign going on, you might have a very high level of, or a higher level of fundraising expenses one year than compared to the other years. If your organization is very young and it's just starting up, you may have a high level of management and general expenses. You might not even have any program expenses in that first year because you're still gearing up and starting your organization. So again, it's going to depend on where your organization is in the life cycle and also what is going on within that year as to the allocation between those three functions. Many organizations, the United Way and, Charity Watch and all these types of things, they like to see 75 to 80% of total expenses allocated to program. But again, that's just kind of a basis, very general. Again, it's going to depend on your organization, how much actually goes to each one of those functions, but that's kind of what the goal is for nonprofits when they're looking at them. All right, so that was kind of the financial statement aspect of it. Let's talk a little bit about how the expenses apply to the 990. So again, all organizations, unless you're a church or religious organization, are required to file an annual 990 with the IRS. So this is what it looks like. I'm sure you're very familiar with that. And if there's a statement of functional expenses that are reported on the 990. So just like your financial statements, you have to report your expenses. 501c3 and 501c4 organizations must complete columns A through D. All other organizations must complete column A. So what those columns are the functions. So if you're a 501c3 or a 501c4 organization, you have to report your total expenses on the 990, plus you have to allocate them between program management and general and fundraising. If you're not a 501c3 or a 501c4 organization, you only have to report your total expenses. You do not need to report them by function. So even if you don't have an audit or a review or an outside compilation done, you still need to track your expenses by function because you're going to have to ultimately report them to the IRS. The IRS, the 990 instructions say that the organization can use any reasonable method of allocation. So again, they must also report the amounts accurately and document the method of allocation in its records. So again, just like for financial statements, we just need to use a reasonable method and we need to document it. So again, when we're looking at the Form 990, we have columns B, C, and D. Column B is the program services. So again, this is just like what we talked about for the financial statements. We need to allocate between program, management, general, and fundraising. And these are the descriptions straight from the IRS instructions for Form 90 for each of the different functions. They are very basically the same as what is considered program management and general and fundraising for under the financial reporting. The only difference is on the Form 990, there is no column for membership development function. So for those organizations that do have members and have some membership development expenses, you're going to include those in column C, management and general. So this is, I know it's very small, but this is the page of the statement of functional expenses within the 990. So again, we can see on the left-hand side is our natural classification. We have the salaries, legal accounting, those types of expenses, just like on the financial statements. And then across the top, we have our program, management in general, and fundraising. So very similar to what we have to report on the financial statements. So I wanted to walk through kind of some of the different lines on the expenses, just because this is what the IRS, these are the types of expenses that the IRS is asking for on the 990. So when you're looking at your natural classification expenses on your internal books, this might be something to consider as to how you're reporting them there so that if they can easily be transferred onto the Form 990. So the first 4 lines under expenses have to do with the organization making payments or expenses for others. So the first three have to do with providing grants and other assistance to whether it be individuals, organizations, or foreign individuals and organizations. So when we're talking about grants and assistance, this includes awards, prizes, contributions, non-cash assistance, cash allocations, stipends, scholarships, fellowships, research grants, and similar payments. So if you are providing, a lot of organizations may provide a contribution or a grant to another nonprofit, or if you're providing scholarships to individuals, maybe you're providing some assistance for rent or utility assistance for some of your clients. All of that is going to be considered assistance, and it's going to go on line 1, 2, or 3, depending on who the recipient is. Line 4 has to do with those membership organizations. So if you have members and you're paying some type of benefit for your members, that's where this line would go. That might be maybe insurance benefits. If you provide some kind of insurance program for your members, it might go on that line. The next set of lines has to do, our expenses on the 990 have to do with employees, payroll. So line 5 is compensation of current officers, directors, and key employees. So I'm not going to go into what constitutes an officer, director, and key employees. There are very specific rules as to what these are, but basically it's your executive director, CEO, those people that have been hired to run the daily operations of the organization. On this line, you're going to include the salary, retirement contributions, insurance, those benefits that the organization has paid for that individual during the year. Expense reimbursements do not go on this line. That would go to the related actual expense, like a phone, telephone, that would go on phone expense. Under this section of the 990, the compensation is going to relate to your actual fiscal year. So for example, if you are a June 30 year end, the compensation that goes on this line is going to be the salaries and benefits paid, incurred, expenses incurred for July 1st through June 30th. There is another section on the 990 where you list all of your board of directors and your executive director and their salary. Under that other part is where you're going to list the amount from your W-2, from their W-2 on a calendar year. So the expense that we're talking about right now, you cannot just pull it from their W-2 and report it on here. It needs to be for your actual fiscal year. If you were on a calendar year and you're under the accrual basis, it also will not equal the W-2 amount because you need to include the beginning and ending of the year accrual amount. Page 7 is where the other compensation is reported for the officers, and that was where the W-2 would be. Pension plan contributions, those would be for your other non-CEO, non-executive director benefits. Oh, line 7, I skipped that, I'm sorry. Other salaries and wages, that would be the salaries that you're paying to all of your other employees. So not your executive director, your CEO, but all of your other employees. And then all of your other employees' retirement plan contributions, all of your other employee benefits and payroll taxes. The next line 11, has to do with fees. So these are basically your professional fees that you're paying to independent contractors, not employees. So a lot of times if you give a 1099, you have to issue 1099s. That's where these amounts are going to come from. Management fees, legal fees. Legal fees should only include the fees actually paid to a lawyer. If you unfortunately are sued and have to pay a settlement, the settlement would not go on this line. This would, again, is just the legal fees paid to the attorney. Accounting fees, so this is going to be your fees for accounting services. Again, if you have an internal employee that is your accountant, they would go on the salary line. This is only if you have a contracted person doing your accounting, or your audit fees, that would go on this line. If you do any lobbying, if you pay any professional fundraising fees, there's a separate line for that. Investment management fees, These are going to be your monthly account service fees, not transaction fees related to sales of investments. And then line 11G is any other fee for services. So again, these are fees paid to individuals, companies that are not your employees. Next, as we continue, advertising expenses, I think that's pretty self-explanatory. Office expenses. Office expenses includes supplies, telephone, postage, mail, shipping, equipment rental, bank fees, and printing. So the IRS wants you to add all of those together and put them on the office expense line. Similar to information technology, they want you to include hardware and software, support services, website, virus protection. They want you to add all of those together and put them on the information technology line. Occupancy, the use of space, your rent, utilities, property insurance, real estate taxes, and mortgage interest. Again, all need to be added together and go on the occupancy line. Travel includes fares, mileage, allowances, auto expenses, meals and lodging, per diems, vehicle leases, and repairs. So you need to add all of these together and put them on one line, the travel line. The reason it's important that you add these together and put them on the correct line, as opposed to adding a whole bunch of separate expenses at the end, is that way when the reader of the financials or reader of the 990 is looking at this, because your 990 again is available for anyone to look at. So when someone looks at it, they need to be able to say, okay, I am looking at the occupancy line. I know the occupancy includes all of these. It includes rent, utilities, property insurance, because that's what the IRS is instructing you to do. So I'm going to assume that all of that is included in that line. So that way, when I compare your occupancy expense to another organization's occupancy expense, it's comparative. If we're not following the instructions and including what all of those items that need to be included in that line, we're not going to be able to compare one organization to another organization. So that's why it's important to include all of those expenses that the IRS says should be on each of those lines on the correct line. And then the last set of expenses, conferences, conventions, and meetings. These are going to be expenses incurred by the organization in conducting the meetings. So if you're paying for facility space, speaker fees, printed materials. Also, if you're sending staff to conferences, so the conference expense, not travel, because again, travel goes onto the travel line, but the actual conference expense. Insurance, interest, payments to affiliations, depreciation is pretty self-explanatory. Insurance does not include employee insurance, for example, like health, life, and disability. Those are going to go up on your employee benefits line. It does include property insurance though, or D&O insurance, directors and officers insurance. And then under the other expenses, the IRS instructs you to list the 4 largest dollar amounts of other expenses on line 24A through D. So there's 4 separate lines under line 24. However, the amount of expenses that you put on line 24 cannot be more than 10% of the total expenses. If it is more than 10% of the total expenses, you have to list those out. So we can't just be lumping a whole bunch of expenses together and calling them other. So again, those are just kind of some summary of the expenses that the IRS is asking you for. So when you're looking at your internal expenses and how they're being recorded, you can kind of use that as a basis. So you know, okay, I'm going to have to report my insurance to the IRS on 990. Should I just have one insurance expense in my chart of accounts so that way I can easily report that to the IRS? You don't have to, but it's just something to think about as you're looking at your internal chart of accounts or if you're setting up a new organization. And then lastly, I kind of wanted to talk about government awards. I know that not every organization receives government funding, but if you do, when we talk about allocating expenses for financial statements and for the Form 990, they're very similar. However, when we talk about allocating costs to government awards or even non-government grants, that's totally different. So, for example, Accounting or administrative fees may be paid for by a grant. So let's say you're getting a government grant and they're saying, yes, you can pay for your accounting fees. So that might be considered program or grant or some kind of grant expense under this grant for this award. However, for our financial reporting and our 990 reporting, that is still considered management in general. So your cost allocation plan used for your financial statements and your 990 is probably not going to match how you're allocating expenses for government awards. So if you do get government grants or other types of, maybe larger grants that require certain things, what expenses the grant is paid for is going to be different than how you're allocating expenses for financial statement and 990 purposes. So a lot of times when you get a grant, specifically a government grant, there's going to be an agreement that outlines how the funds can be used. It's going to say what expenses you can pay for with this grant. It's probably going to have a budget. Also, if you get government money, there is a uniform guidance compliance that you have to follow that's issued by the federal government, that it is also going to talk about allowable activities and costs, what kind of expenses you can spend under these types of grants. They also ask for a cost allocation plan. So you're going to want to have a cost allocation plan for your grants. Some grants require matching funds. And then also some grants will allow you, there'll be subrecipients. So you receive the grant and then maybe you pay some of that grant to someone else, to another organization. If you do that, you just need to make sure that you're also responsible for the funds spent by those subcontractors. So again, when you're getting the government awards, you want to make sure that you look into OMB Circular A-122, where it establishes some of those rules to follow on how to spend those government funds. Again, making sure there's a written cost allocation plan in place, and that type of thing. And you can go, this is an example, the Office of Management and Budget, where you can find the OMB Circular number A-122, which is what 501c3 organizations need to follow. So again, if you get government money, just make sure that you have a process in place to make sure that you are spending the funds how you're supposed to be spent, how they're supposed to be spent. And when you're allocating expenses, the way you allocate expenses for financial statements and 990 purposes and not necessarily going to be the same way that you allocate for grants. And again, the OMB circular is going to go into what the allowability of costs are. So basically, it's similar to what we talked about, be reasonable, consistent, that type of thing. But again, something to look into if you do get federal government grants. And then just a few final thoughts. The AICPA provided a good error summary of the top errors in allocating expenses. The first was the lack of expense allocation methodology. So again, making sure that you have a basis in place. Incorrect classification of management in general. So making sure that you are allocating expenses reasonable to program, management in general, and fundraising. And again, you can go back and revisit the definition of those different functions, making sure that all your expenses are classified properly. Not allocating enough costs to program, ignoring consideration of joint costs. So we talked about joint costs where we have both fundraising and program expenses. Not considering the level of detail and natural expense presentation. So I just touched briefly on this, and that's again when we're looking at the left-hand side, when we're looking at our salaries, supplies, legal, accounting. So consider what level of detail the reader of your financial statements needs. Again, there's no specific rule or standard that says you have to have a certain number of those expenses there. You just need to make sure that they are reasonable, and so that the reader of the financial statement can properly understand where you're spending your funds. Lack of fundraising salaries, expense allocation. If you have contributions reported on your 990, the IRS is expecting you to have expenses for fundraising, because who is spending time requesting those contributions? If you have volunteers doing it and you're not having, and you really truly did not pay anything for fundraising, then it would be good to, on your 990 on Schedule O, make a statement that all of your fundraising is done by volunteers, and that's why you don't have any fundraising expenses. And then finally, misclassification of investment related activity. So just want to end with some best practices. For natural classifications, less is more. Again, looking at the left-hand side, your salaries, your supplies, go back and look to see if what you have is reasonable. You do not want to list every single one of your expense accounts on there. That is not going to be good for the reader. Programs should really tell your story. So some organizations only have one program, or maybe they have multiple programs, but they are very similar. So you just put them on one column called program on your financial statements. However, if you have multiple programs that are really different, you probably want to split those out to make sure that you're really telling the story of what your organization is doing. Take credit for what your employees do. Go back and do that time study throughout the year and determine what your staff is involved in and properly allocate them to the programs. Review your allocation methods. So do you have a reasonable, consistent, documented method in place? Is it based on a reasonable methodology? Is it based on square footage or time and effort? If it's just based on revenue or usage, again, those not really considered reasonable basis. So you probably want to go back and reevaluate how you're allocating your expenses. And then finally, don't forget about membership development costs. Because again, for those membership organizations, time spent recruiting new members or communicating with members when they don't receive a benefit are going to be considered the membership development costs. So kind of a summary there of expenses and how to allocate them both naturally and functional for your organization, both based on your financial statements, Form 990, and if you do get some government grants. So with that, I'll turn it back over to Tyson.
Thank you, Carrie. Just a quick reminder here, this webinar was recorded. The slides and the video are going to be available on our website in the not-for-profit section. A link to this section will be emailed out to everyone attending today, along with Carrie's slides. While on the site, be sure to register for our next webinar. It's going to be on October 12th, and we're going to talk about churches and religious organizations. It's good to see some new faces here, along with some returning members. I just want to remind everyone, our webinars, they're free. They're open to everyone. So feel free to share our links with other people in your organization, your board members, your friends, your family, really anyone that you think could benefit from these webinars. I want to thank everyone for joining this morning and have a great rest of your day.